Good evening, everybody. Tonight we're going to spend time observing the obvious, which basically, let's do a sound check. Everybody hear me all right? Sound is good? All right, good. Let's see. I'm supposed to... Yeah. I'm supposed to remind everybody. Let's try to get back to everybody asking questions about the lake. So if I haven't gotten back to you, I will, or send me again your phone number if you need more information. I'll get to everybody. So whether we'll be able to fill 2 sessions this year or not. Okay. Good amount of interest. Okay. So this is where observing the obvious is observing the obvious. Shooting star doji, and then a doji today. See if I can make this any bigger. But the important aspect of all of the cell signals is look where they were occurring. Right about the same level. Things topped out before. We're in the overbought area. We've had wave 1, wave 3 getting relatively close to that same magnitude, and we're starting to see some potential sell signals. So it wouldn't be surprising if we saw a lower open tomorrow and they bring it back to the T-line. Not necessarily meaning there's a full-scale reversal unless they breach the T-line. That means they could be coming back to test the 50. But if they just bring it to the T-line and do a J-hook, that means they're probably heading back up to go through this area. Guess we're at this pretty much all-time highs. I didn't even realize that. So that same analysis is the Dow showing us anything out of the ordinary? It's also the third time it's tried in these last 3 months. Let's see what's... yeah, kind of the same scenario on the NASDAQ. The only thing that we always have to keep in mind, if we see an uptrend, sell signals, a pullback, then the next uptrend comes up and they start showing sell signals before they get up here, that's not a good sign. What that could imply is they're going to go back into another kind of wedge type formation or a sideways mode. But I say that's bad in the sense that if you want to be bullish, but because we can quickly analyze what's actually happening here, and again, the analysis comes from this being kind of the first indicator to say, all right, you're up here in the overbought area. You're seeing a gap up, and then they can't go up any further. Excuse me. That gap up in the overbought area and then not confirming mean, all right, maybe we've seen the last gasp. And if that last gasp is below this level over here, that's what kind of allows us to get ready for what could be the next pattern or that sideways pattern. Same type of situation, bah humbug, over here in the S&P 500. You can see where the doji gap up occurred, and then it hasn't confirmed since then. That's kind of telling you, get ready to take profits. So at least we know what to do from this point. If it opens lower, you definitely want to scrutinize your long positions a little bit heavier and say, all right, let's start taking some profits, or there's not a complete sell signal, but if I'm in something, I'm trying to think of something. If I'm in something that hasn't shown a sell signal, but the markets could be turning over, I'm going to be a little bit more scrutinizing as far as watching for another sell signal setup. But you can see that I was showing CVM because we got some good profits in it ever since it broke out of its little bobble breakout and creating this fry pan bottom. So we're either there or we're looking for it to come up here into the trend. Okay, what else do I have? I guess the scenario should be, we should be looking for things that are creating strong patterns or identifiable patterns. As we can see in our QD, because it was creating this fry pan bottom off the 50, pretty much tell there's a fry pan bottom going on. So this is why I always say watch to see what it does at the breakout. And that watch to see what it does means that this come up and come back down and close below this level doing a shooting star. Well, that told us we had a sell signal at the breakout level. The fact that they closed up above this level and did not do any sell signal implies you might still have some more upside. So this is why the first things that you want to really understand and learn visually and what the signal represents is what does a sell signal look like and what is it kind of indicating. So this wasn't a sell signal, but had they closed back down here where the tail is 2 times greater than the body at the breakout level, that's immediately telling you there wasn't strong buying at the breakout. Get ready to cover. Now we're also looking for the same thing on the buy side, which means like Crocs, that best friend signal is giving you a high probability that there's going to be an uptrend, which was the same reason we were going after ML and T. That is that. Because this is why we want to learn what happens based upon the signals created by human nature. Best friend, gap up, significant gap up. Obviously coming from 175 and closing at 630 on this day, that's a significant change of investor sentiment. Not good here. But what do we expect after this type of thing? And this is where learning the candlestick signals and patterns and understanding what they create as far as expectations allows you to be a much more, not flexible, much more aggressive investor, knowing, all right, if we've got a profit taking, what are we looking for? Well, the next day, which was Friday, told us there was a little bit of indecision, not any more selling, and then what happened today? The selling is gone and the buying has stepped back in. So what were we expecting off of this type of pattern? At least a 45 degree. So anytime we see that best friend signal, what is our anticipation? At least an uptrend. So we're already identifying things that's going to hopefully put us in the right direction at the right time. So again, this is not rocket science. This is what normally happens in human nature. All we're doing is learning what results of human nature gives us a better prospect or a better probability that we're going to be in the right place at the right time. Snap already had a nice trend to it, kind of indecisive in here, but once we saw this kicker type signal, what did that tell us about the strength of the uptrend? It was still there. And now what's our next basic rule of staying with this one? You stay with it as long as we don't see a sell signal to close back below the T line. Oops, I did that one down there. We recommended PVRB, PRVB, same scenario. Big best friend type signal, lots of profit taking. You could see the selling, so we really didn't want to get into this. We really didn't want to get into this, didn't even see this, until right here, where this came up on a very simple scan of the biggest percent move, and we also noticed that it was after this big price move, pulling right back to the T-line. I'd still be a buyer of this one on positive trading tomorrow. Because what would you have? Kind of a little morning star signal off the T-line. Stochastics curling back up. Positive trading is going to give us what? A bullish doji sandwich, implying there's more upside. And what's the significance of the upside on this one? Well, if it moves from here to even back up in here someplace, that's going to be pretty close to a 70, 80% upside potential. So because we know what happens in human nature, that means we don't have to stick with things that are going to be a safe, I don't want to say it that way, a mild-mannered return. If this one starts moving, look at the upside potential based on this move percentage-wise. Even if it moved back up to this level from here, that's an 80% return. And then what we're really anticipating, not anticipating, but have the upside expectation or possibility is look where this one came from. Well, going back far enough, back 18 months ago, this one was trading at $100 a share, and now it just bounced off of $1.70 or $1.50 and started back up again. So what's that kind of tell us? Why do prices move the way they do? Because human nature is involved. And so if somebody looks at this and said, should I be buying this at 7, 9, 12, 15? Maybe they're not going to have that much apprehension because they can see that at one time it was trading at 100. Oh, I don't know whether PVRV or well, it's a fairly new, let's say a couple years. Now you look at the big picture, look at their big fry pan bottom, now the breakout. Well, what does this kind of imply, this breakout? What had been a very boring stock had something happen to where it now becomes a relatively active place to have your money. Now, is it good to have your money in active places? If you can read what the chart is telling you, yes. If this had the potential of a 4% upside or a 40% upside, I'm going to go with a stock that I can read the chart and say, yeah, let me go after the one that has a 40% upside because it's going to move in the same manner as something that moves slowly because human nature works the same way time after time. OLED. You can kind of target where this might move to. Back up into the trend channel. As long as it stays above the T-line, let alone the 3 T-line. I'm just going through some of the ones that we've recommended recently and why. We got Vail that had kind of your little bobble breakout, and what did the bobble breakout do on this one? There's our kicker signal that took us back up through. And what's the kicker signal illustrate? One of the strongest, if not the strongest, individual candlestick signal. ATNX. This is the reason we go through chart after chart is because prices move the same way time after time. When it broke out through this level, what did that tell us about this little slow curve fry pan bottom? That investor sentiment was coming back in again. So now we can make at least a logical assessment based upon the candlestick signals. What's this all telling us? There's lots of indecision up here. Pretty much tells me that if something dramatic happens from here, such as they open it much lower and start trading down, it's time to be out of this position. Or if it trades flat tomorrow, you probably want to close out the position anyways. You're in the overbought area and you've got 5, 6, 7 dojis. What's the worst case scenario? You put a buy stop up here. Because if they pop it this way, you know what's happened. Wave 1, wave 2, wave 3. What does that do as far as your equity? Keeps you from holding on to something that might pop all the way down here and start heading down, and you give back 14, 18, 20% of your profits. ESV. Another one that we can see what's happening. There was your bullish doji sandwich. Now we just have a very simple strategy. As long as this stays above the T-line, you can stay with it. EVH. Recommended today because of the cradle type pattern. Now it opened positive and closed back below the T-line. If you bought it up here, you have two mechanisms or two strategies. One, you could have closed it back out. Or two, because you're just starting out of the oversold area from a cradle pattern, your strategy is that it has to open positive and trade positive. And let's say you haven't even bought it yet, it still doesn't leave your watch list, because what do we got down here? A cradle pattern. We know what a cradle pattern usually represents. When they get it moving, it's going to be a strong price move. So where would be a good, safe place to buy this one? Well, if they came back up through today's open and tomorrow's trading, that tells me they're still confirming this signal. That was somewhat the same. Oh, it was QD. Same thing that we kind of recommended on Friday, where QD opened and immediately sold off. But because it was doing this, it was just a very simple analysis to say that if this came back up through that open, that means our pattern was still working. That's where your entry point was. And at that point, that's pretty much the breakout of this patterns. So this is why I always kind of pound in people's heads, learn the patterns, and then you can just get very fine-tuned on what's going to complete that pattern based upon what happens on an individual price move. Where am I? Way down here. Oops, MAXR. Still watching this one. There's a buy signal right there. Did a little shooting star today, but not quite in the overbought area. So where do you put your safety stop? You still have your safety stop just below the T-line. All right, so things are getting a little bit soggy. So when you start seeing things that might be iffy, you make sure you always have a safety stop in. And I say that with a little bit of conviction, because every time I sit and say, I'll watch this, when it took maybe 7 seconds to put a stop right here, it opened and bam, it went down through there. I'm looking and saying, what the heck? I knew to stop out right there. Now it's trading down here. Now what do I do? I don't have the 20 on this chart, Michael. And I don't even have the 34. I usually have the 34 EMA. The only reason I don't have it here is sometimes when these charts disappear, I bring them back up and I forget to put the. But usually I have the 200, the 50, and the 34 EMA as well as the 8. and the 3 EMA, the 8 obviously being the T line, and the 3 EMA, the 3 T line. Now, I used to have the 20 on here, but the 34 usually gets more activity than the 20. The 20 will act much more compellingly if you're in a steady trend where they don't bring it back to the 50. They'll usually use the 20 as an indicator or a support level. J-bell, your little J-hook pattern, gap up. That strength of this gap up should still put you in an good upward direction. BC, whenever I see something like this, again, there's our best friend signal. Okay, Kosh, yeah, we can do that. And I'll kind of build these in. That's why I try to build some of that in. But it's very simple. This is your best friend signal, gap up through the T line. What's our trading strategy? Right now, we just stay long until we see a sell signal and a close below the T line. So if you're long on this one, you come in tomorrow, you say, I'm just going to put a stop at 52, 94, 93, 90, because it should go in this direction. SFIX. This is why you want to know what the nature of each signal is. And there was our message where they gapped it up, sold it off, and then you started buying after the selling stopped because you had a 45 degree. So you still stay in this one as long as it stays above the T line. And notice a doji, 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 but they haven't closed below the T line. So you still have your safety stop just below the T line, because if they open it lower and take it down through there, yeah, that was the top. However, if this is still in an uptrend, the expectation should be that if it opens positive, it's because the sellers aren't that convincing. That's why these are indecisive pullback days. Oops, there's a whole list there I didn't get to over here. ARQL. Because of the best friend signal, you're in a 45 degree. Now, you see the bearish engulfing signal. Remember, our rule is you hang on to it as long as it stays above the T line. However, let's say we wake up tomorrow and we see this selling off and the market selling off. Where do you think the next target's going to be? And lower. That's a 5% move. Maybe you take your profits and then watch to see what happens at the T line level. Roan, little best friend signal. Doji gap up. Can you be buying this one? I'd probably be a buyer if it came up through this level. Telling me they were moving away from the T line, still confirming this, and looking for a good percentage move. Now, I don't trade these price stocks, but for somebody that's trading a $2 stock, you find the same signals and patterns and the same psychology in a $2 stock as in a $200 stock. So here's Here's why you want to know what the normal price patterns are telling you. Here's our nice little kind of J-hook pattern. There's our doji sandwich. In this case, it didn't confirm more upside. So what's that telling us? More than likely, they're coming back to test the level that was acting as a resistance level or a potential resistance level to see if it's going to act as support. So if I was long and this opened lower tomorrow, I'd close it out because it's either coming back to the T line, but more likely the 50. Now, the reason it's more likely the 50 is everybody and their brother has the 50 on their charts. nobody has the T-line. So more than likely, the majority of people trading are going to trade it back to a level they can see, which is the 50. Now, that becomes a very high probability trade setup, because if they come up through a resistance level, they come back and test it to see if it's going to act as support, and it acts as support, with everybody watching this to see what it's going to do. If it's supporting off the 50 and starting back up again, what do you think the normal investor sentiment is going to be? They're all going to say, well, they can't trade it back below the 50. They're taking it back up. So where's our next likely target? Up to the next resistance level. So the reason I keep this on, even though I might close it out, is because if it supports and does a J-hook off the 50, everybody sees that, and the confidence steps back in, and they'll take it up pretty hard. So at that point, you could have a wave 1, wave 2, J-hook pattern going into wave 3. Remember, prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. So human nature works the same way time after time. Here's one that we were buying right in here because of the trend kicker signal. That told us there was more upside. When was it time to sell? Well, there was a bearish Harami. There was a doji that just hit the T-line. So what did we want to see today to stay long? We wanted to see it open positive, trade positive, telling us the T-line was acting as support. What did it do today? Did a bearish Harami followed by a bearish doji sandwich? What do we know about a bearish doji sandwich, especially if it closes below the T-line? There's probably more downside. This one was closed out today, just because of simple ABC type of analysis of what human nature normally does. Marvell, observe the obvious. Whoops, I didn't draw it on here, did I? The obvious being, this was a resistance level. Oh, pshaw. And it came back up right to that kind of observable resistance level and did another bearish signal. What should you have been doing in here? Should have been closing it out. Should you be going short? We don't know that until we see what they do right here at the 50. If they keep hovering in here, we watch the 50 and see if eventually it's going to break out through this level. But right now, what are the prospects of it going higher? We've got a sell signal. Stochastic's heading down. We're below the T-line. We're sitting on a support level. If it opens lower, it could be going lower and maybe doing a trend channel back down to this level. But because we know right here they were selling it, if we were long, was looking for a J-hook pattern breakout, and it didn't break out, told us to be right back out of that trade, move on to something else. ADI, because of the J-hook bobble breakout, we're staying long. But again, we've got that gap up, indecision. Now, it's not quite a sell signal. We're still trading above the T-line. But at this point, with trading in the overbought area, if it comes back down through the low or through the open, it's probably they're heading back down. It's time to come back out. Where are they coming to? Either the T-line or the 50. So if you're long, you essentially want to see something stay above the T-line. So look what happened in GH. Looked like a good-looking uptrending stock until we had the left-right combo, and now the close below the T-line. So not a real dramatic close below the T-line, but what's the other aspect that we can put into our analysis based upon our visual analysis? We can see that it's not bullish. It's rolling over. So if we didn't close it out, which we should have today, it has to open positive and trade positive. Or if you did close it out, you can see there's kind of a little wedge formation here. You could always buy it back. But right now, the probabilities with stochastics heading down and you're below the T-line, remember, anytime you're below the T-line, the probabilities have gone against you dramatically. Plan came back up above the T-line. What do we need to see after this hammer type signal? We need to see it trade positive. If it opens lower and starts trading lower, what would that tell us about the selling today? They took it back up, but the bulls couldn't control. The sellers are in control. Close it out again. A left-right combo. I'll find one, Kate. Sienna. Same scenario. If this was, you're buying this based upon a J-hook pattern, which we were, there was your little hanging man confirmed. With it closing below the T-line, what's it tell us about our J-hook pattern? It's disappeared. Now we might be in a downtrend. The last one before plan. Oh, GH. Guess a bearish left-right combo. A left-right combo, anytime you have a doji involved with a multiple day signal, in this case, you had a bearish left-right combo, which was a doji followed by a bearish engulfing signal. Now that's a little bit stronger than just a bearish engulfing signal because of the doji involved. So anytime you see a doji bearish engulfing signal or a doji, I don't see one on here, but I'll find one. But anytime you see a left-right combo, you've got to be a lot more aggressive as far as getting in or getting out of a trade. I'll find more left-right combos as we're going through this. Zine. Oh, one of them. I guess this is the batch that said there's a bearish left-right combo, which was a doji bearish engulfing signal. Now what do you have? Bearish left-right combo followed by a bearish doji sandwich. What do we know about the results of a bearish doji sandwich? There's probably going to be more downside. So if this had pulled back, what do we need to keep this uptrend going? We needed positive trading, not closing below the T-line. With it closing below the T-line, now what did it make? A bearish doji sandwich. It's in a downtrend. Kind of the same thing there. This was your warning, that big move. So what do you have here? You've got a shooting star doji bearish harami, which means if it traded lower the next day, you closed out the position. So if you were long from this kind of doji sandwich, kind of a breakout, this told you that right up about this level, you had weakness. And if I had been long, I would have simply put a safety stop at the low of Friday, because if it came back down through there, which way was it going? It was confirming the doji. Oh, there's a bunch here that skipped. Clovis. This is a good example of, notice that we didn't quite have a kicker signal. Remember, a kicker signal actually opens above the previous day's open and goes positive. This opened a little bit lower. You could have had an uptrend, but this is why I always have a safety stop on. Or if I'm sitting here watching and it's coming back down through the T-line, it's not supposed to be going this direction. You close it out. So now what do you have in progress? Well, the overall trend obviously is a downward trend channel. There might be still some more downside. So this needed to stay above the T-line to stay long. The fact that it came back down through the previous day's open and the T-line showed you it's not going in the right direction. Close it out at that point. So there's times where you close things out intraday, and that's when you've had a severe, the Clovis could be a bearish J-hook pattern. So here's where you observe the obvious. There's your fry pan bottom. There's your breakout. When it broke out through the 50 with a T-line crunch fry pan bottom, where was your next likely target? The 200. When it got to the 200, how did it get there? Remember, the number one teaching aspect of candlestick analysis from the Japanese rice traders was, where do most people buy? They buy exuberantly at the top. So anytime we start seeing a gap up in the overbought condition, start thinking about taking profits. A gap up in the overbought condition and trading right at the 200, what do we need to see the next day to want to stay in this? Breaking through the 200. A doji. What's our simple doji rule? If they start trading it lower, what was it telling us? They weren't going through the 200. You should have been taking profits up here. I would have probably, when it came up here and kind of stalled, sold off half the position. Now I've got half the position that if it goes higher, great. If it starts backing off, I close the other half. I got most of that trade. That's right. A gap up in the overbought area is telling you, just kind of restating what the Japanese rice traders tell us. Where do most people buy? They buy exuberantly at the top. Where do most people sell? They panic sell at the bottom. So that gap down in an oversold area, you start looking for buy signals. The gap up in the overbought area, you start looking for sell signals. What it needed to do a classic pattern, was it pretty much needed to hold here at the T-line. And if it did a J-hook pattern and came back up through there, there would be your classic pattern, which is, what do you expect coming out of a fry pan bottom? A strong price move. What do you need as a prerequisite for a J-hook pattern? A strong price move. So the classic pattern is a strong price move and then the J-hook pattern that follows it. And CBLK, anytime you see a buy signal and you get up toward the overbought area, have a safety stop in here. It's so simple. Now everybody says, well, what if they come down and pick us off and head it right back up? In this day and age, if you've got a 3,000 share position right here and they go through 84,000 shares to get down to pick you off, they're not doing that. That's 84,000 shares somebody's selling. What else we got? Oh, I didn't do the biggies yet. Tesla, look what's happening here. If they open this positive, what do we have? A bullish doji sandwich bobble breakout. If they break out through this level, where do you think your next target's going to be on a J-hook type pattern? Wave 1, wave 3 should bring you pretty close to the 200-day moving average. NVIDIA needs to open positive to maintain the uptrend. Notice what started the uptrend. There's your kicker signal. What continued the uptrend? There's your best friend type signal. Facebook has held up well. Ever since it bounced off the 200, notice the bullish harami right here. I may not have bought this because that's not a true reversal signal. However, look at your double doji sandwich. Came up, pulled back. When it did that bullish harami right smack dab on the T-line and gapped up, look where they gapped it up to. Not to the resistance, well, and say, not to a resistance level. If they're gapping it up, they're not gapping it up to go right to a resistance level. They're gapping it up because they've got a good, strong feeling that that resistance level is not going to act as resistance anymore. So now what do you have in this slow uptrend, not slow uptrend, but choppy uptrend? There's your J-hook pattern setting up. Netflix was acting well ever since your morning star signal right off the 200 gap up. Now it did a shooting star right in about the same area that you might have a top. You're not quite in the overbought area. So if you're long Netflix, just a very simple assumption, it has to open positive and trade positive. Now, that's also going to be a function that if we wake up tomorrow and the pre-market futures are showing us that the market's going to open down 120 points and Netflix is going to open lower by $1, yeah, you probably want to start getting out of it because that shooting star at the resistance level area is telling you, yep, they're going to pull back to either the 50 or the T-line. But the probabilities based upon witnessing a sell signal is telling you they're probably selling it off on the confirmation. Uptrend in Amazon. Very simple. You have a doji right here. Stochastics in the overbought area. To stay long, it has to open positive and trade positive. If it opens lower, at least expect to come back down and test the T-line. At that point, you have to see what they do from there to see whether the uptrend is holding at the T-line or whether there's going to be more weakness. Apple, rolling over, broke out. A little hanging man, doji, stochastics up here. Simple doji rule. They're going to move it in the direction of how they open this one tomorrow. Disney was a good potential breakout of a fry pan bottom. You can see the big fry pan bottom setup. The resistance level right here. Came up a few times to try to test that level. Probably even make it a little bit more accurate. Test. Today it closed just below the T-line. Pretty much a failure of the this level. If this opens lower tomorrow, you close out the position. To stay long, it has to open positive and get back up above the T-line. Labu. Kind of your, almost, it looks like a bearish, left-right combo. Looks like it engulfed that doji and then sold off. So what's that tell you about this fry pan bottom breakout? It didn't break out. Now, sitting right here on the 50 still becomes a very important factor to see what do they do here at the 50. If they do a bullish harami, now we've got probably that cup and handle or classic type pattern. If they open it lower and trade it lower, it's telling us, oops, this was just kind of a pop. It failed. It's probably coming back down here, which means there's probably going to be 3, 5, 7 trading days that you can be shorting the biotechs. And because we can analyze what an individual commodity is doing, look at the J-hook pattern. Look at our little rounding bottom breakout of gold. Then the J-hook pattern with kind of an evening star or morning star signal. Wave 1, wave 2, or wave 3, which means we can easily identify which sectors are acting the strongest. There's probably a resistance level or a breakout level. Right there. Look what it did. It gapped up through that level. Now, remember, no, Lab D, Labu could be, Lab D could be bought. I'm sorry, mixing gold and biotechs. But because we can see that this broke out, remember, we just said if you see a gap up in the overbought condition, start looking for selling. With the exception of if that gap up occurred at something that was relevant, a resistance level, a trend line, a moving average, and it gapped through it, then the gap up now becomes a different animal in the sense that's telling you they aren't resistant anymore. There's still more upside. So with that, you have a lot of the gold and silver stocks that are performing very well. SA. Notice the kind of the trend kicker signal. What were the other ones? AU. Again, this came out of that slow curve gap up J-hook pattern. Notice they couldn't close it below the T line. Newmont. There's your kind of fry pan bottom. Gapped up through that resistance level. So that wasn't a gap up in the overbought area. That was a gap up through a resistance level, which means you kind of expect more upside. Look at the best friend breakout of the 50 on pause, which means there's your first likely test area. Let's see. So there's a lot of gold stocks. So when I see something like this where a whole sector is moving well, if I've got 10 positions on, maybe I've got 2 gold stocks in my portfolio. GFI, look at the gap up breakout, wave 1, wave 2, wave 3. And SSRM. Big fry pan bottom. What did it do today? It didn't seem to stop. So the prospects, notice your little left-right combo right there. Let me make this big enough where we can see it. Again, this is what I call 2 plus 2. Broke through the resistance level, both the 200 and the 50. And it pulled back. And where did it pull back to? Right smack dab on the 200 and did kind of a bullish engulfing left-right combo. What'd that tell you? They took out sellers, and they showed you exactly where they were supporting, starting the next move to the upside. Anytime you see this type of move, pretty much what's happened is they've taken out sellers, which means any buying has less sellers in front of you at that point, making the next trend that much more likely, and not only that much more likely, but that much stronger than the previous trajectory. There's a left-right combo, doji followed by a bullish engulfing. Why is that relevant? Look where it occurred, right smack dab at the 50-day moving average. When they gapped up the next day, what did it do? It broke through this little level here, telling me I've got wave 1, wave 2, wave 3 is now in progress. Oh, boy. Oh, the ones that we haven't been in yet, but still look good. Oh, I'm going to go way over time tonight. There's your best friend on BRFS. We do have some of this. You just stay long as it stays above the T-line. PIRS. There's your left-right combo. Kind of breaking out through this area. You can still be buying this one on positive trading from here. Billy. Kind of your little bobble breakout. J-hook pattern. You can still be buying this one. Let's see. At Goro on here for Goro. There's your fry pan bottom. There's your bobble breakout. Where do you think your next target likely will be? Up here. Now, from here to here, that's 3/4 of a point on a $3.50 stock. That's pretty much a 25% return. I'm just doing that quickly. That makes it a a decent risk-reward factor. APHA. Look where you're sitting, right here on the 50, after a hammer type signal. So what would happen on a positive open tomorrow? It would tell you the 50 is not acting as resistance, and then if they broke through this level, where's your next target? The 200. So these are just things that if you watch for the obvious, meaning knowing what the signals are telling you and where the pattern breakouts are, look at your little scoop type pattern on KRYS. Doji, 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 best friend. Expect at least a 45-degree off of here. Now, this is why when we go through our trainings, that when we show the 12 major signals, the 6 or 8 patterns, and the combination of those for the top 18 top-ranked signals and patterns, you don't want to try to cram all that into your head at one time. You want to just kind of learn maybe 4 or 5. Because even with 4 or 5 strong signals or patterns, and you understand what makes them work, now you can concentrate on where do you enter, what do you expect to happen once you enter, and where do you come out. So if you become an expert at 4 or 5, and I can pretty much guarantee you that if you limit your expertise to 4 or 5 trading pattern strategies, you're always going to have more trades than you'll ever be able to handle. So you'll be always in a constant process each night of maybe there's 6 good trades based upon the 4 signals or patterns that you're concentrating on. Now your process is very quick to see which one of those 6 makes for the best opportunity on a bullish confirmation the next day. Once you start mastering your signals and patterns, you do not have to depend on news or anybody else's recommendation. You can pretty much analyze what should happen on your own and not be at the mercy of having to have somebody else help you or even instruct you of what should be a good buy. I mean, I laugh when I see lots of these supposedly talking head experts on the financial news stations, and they tell or they say that the such and such stock or the such and such industry is going to be good or bad. They have no earthly idea. How many times, I'm just getting off subject here, how many times have you seen Cramer come out with a buy recommendation and 4 days later it's trading way below where he recommended it? There's only one expert to me in the analyzing the market, and that's the market itself. We just want to see what the charts are telling us. So ATEN, nice fry pan bottom, broke out through the 200. Then what did it do? It came right back to the 200 and the 50, acted as support. What's that implying? Your fry pan bottom still has a lot more upside. I think if I could get rid of that. So there's at least a gap to fill up here. Bill, yes, there was actually websites set up to listen to what Cramer recommended and then do the opposite. And that's not just with Cramer. I see so many supposedly expert analysts that come out and they put out a recommendation, or I guess even more blatant observation is you see somebody do a downgrade on a stock and it sells off for a day or two because everybody that's following that analyst closes out their positions, then it turns right around and heads back up the direction it was going in the first place. Ruby, another nice fry pan bottom, and look where it pulled back on Friday, right smack dab to the 50, telling you they weren't selling it off. ATVI, slow curve, supporting of the T-line, T-line crunch. Where do you think your next target is? So when you have something like this, and you can see your target, maybe you buy a spread. You buy the 47.50s and you sell the 52.50s. Because if it comes up here to this target, you've got much more leverage with less money exposed. For you. What did it tell you today? Use the T-line as support. There's your fry pan bottom. There's a potential J-hook pattern. If I was going to trade this, I'd just see if it comes up through this level. And if it does, I know I've probably got another strong move in progress. Momo, same scenario. There's your kind of your bobble breakout. Came up through the 200. Notice it used the 200 twice as a support level. Your uptrend remains in progress as long as it stays above the T-line. On the other side of the coin, because we can see that this may not be the time to be buying this market, that there's a potential, some profit taking in a pullback, you can scan just as easily for sell signals. Look at FedEx. There's your bearish left-right combo. Let's make this bigger. Oops, I'm sorry, that wasn't a bearish left-right combo. That was your doji, kind of gap down. Now you're back down through the 200. Where do you think the logical target is at this point? Probably right down here. So this would be a good short at this point. ANX. This looked like a good bullish J-hook pattern breakout, but it didn't confirm. Now it's failed the T-line. So where do you think the next likely target could be on this one? The bottom of this trend channel. Oh, FedEx earnings tomorrow? All right. Thank you, Lou. What happened here? No. Oh, T2. Trying to find, what did I do? Anyways, there's a nice little J-hook pattern setting up. Look at your bobble breakout. But that wasn't the one I was looking for. Pure. Look at your gap down. Target back to the 50. So Labu, again, telling us with this sell, and if it opens lower, also one that could be heading down in this direction. Might be buying puts on this one. This FedEx, it's sitting on the 20, all right. No, it was a sell. I thought it was, I don't know. Doesn't matter. Got a bunch of them here. Bristol Myers, anytime you see a kicker signal, I tell you, they're trying to get out with great enthusiasm. I would think the first target is here, and with that kicker signal, it could be going much lower. ANAB, you can see the rollover here. Now, you saw they tried to bring it back up, but what happens when you're coming out of a dumpling top? There's usually a very powerful downside. So there's one that you could be buying puts on, because it could come all the way, no telling where. Let's make this as smaller. No telling where it could come back down to. RG and X. Where did it fail? At the 200? Where's your first target? If it breaks through the 50, another one that could bring you all the way back down into the channel. Because of the failure of not only this stock, but the biotechs in general. And then carbon black. This was a simple one where if you were long, you had your safety stop here. And remember, the safety stop starts going into place, especially when you start nearing the oversold or the overbought area. Now, you might have a bearish J-hook pattern. If this is wave 1, wave 3 could bring you all the way back down to this level, depending on what they do right here at the 50. So when I say depending on what they do here at the 50, it's very easy to see whether the 50 is going to hold or whether they're based on a candlestick sell signal, another red candle, it goes through that level. Celgene, there's your bearish kicker signal. There's your gap to fill down here. So just, again, that bearish kicker signal is usually a lot of strength to the downside. Oh, let's see. We shouldn't be doing these yet. We don't know if there's a wave 3 yet. It did a bullish Harami. It needs to show positive trading from here. But that's a good likely setup coming out of the fry pan bottom. Okay. I guess that's about all I got. Got to just keep in mind that we're up here, right about where things topped out before, and we're starting to see sell signals. Get ready. And when I say get ready, if we see sell signals occurring in the overbought condition at the place that it topped out before, in the overbought condition, if it opens lower, we're already prepared to be more aggressive. Oh, is that what's happening, Kenneth? All right. It's in the process of buying Celgene. All right. I would have thought Celgene would have had a little bit better, unless they've offered a lower price than where it was trading, which sometimes can happen. Celgene was going up because there was rumor maybe of a buyout, but the buyout was at a much lower level than everybody expected. Okay, is there any general questions on candlesticks? Yep, somebody, private message. What is the apparel for coming for 2.5, 3 days at the lake? It's summertime, but we always recommend to bring a light jacket because some nights it gets a little bit nippy. No birthday suits, yeah. I try to talk people into that, but apparel is appreciated, yes. But you bring your shorts, your Hawaiian shirts, and your the only thing that you really need to bring is what we call water shoes, whether they're Crocs or because the water is very fresh and clean and refreshing. But on our little beach out in front, there's that layer of maybe 4 feet of little pebbles. So you want to make sure you have shoes on as you cross those pebbles. We have coffee maker, yes. Sandy makes. We got the what do they call it? The coffee maker that makes the coffee. We put the little Keurig. That's it. We've got blenders. We usually have big cases of wines. Remember, we're in the heart of the wine country up there. There's 58 wineries. So nobody goes hungry. Always good food right along the lake and the restaurants. Yes. So Andy gets up. We get the day started with a good breakfast, and we usually eat the breakfast out on the deck overlooking the water, and then we get started. And during the day, we got whatever drinks, coffee, iced tea, lemonade, Cokes, Diet Cokes, whatever somebody wants, we just stock up on it. And Sandy always gets a batch of breath mints for me because he says my breath could knock a buzzard off a honey wagon. Okay, for 110. All right, so yeah, part of that, if that part of that deal is a total of 110, but with stock, usually stock will kind of knock down the price a little bit. All right, thank you, John. Okay, I guess with that, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. IMUX. I saw IMUX had a big move. Was there something going on there or something about I'm thinking that was some sort of buyout offer. Anyways, if it's a buyout situation, you definitely want to watch to see what the terms are. Microsoft, you can stay long. I think it's at an all-time high. And right now, all you can do is stay long. Look at your bullish Harami gap up. Scoop type pattern. So just very simple. You stay long on this as long as it stays above the T line. Intuit, this one has to open positive and trade positive. Otherwise, look where you've had your bearish left-right combo, right at the last resistance level. If it trades lower through the T line, it's coming back down to test the 50. So you probably want to be out on any weakness, especially if it goes down through the T line. ILMN, I'd have a safety stop right here. If it came back down through the low of Friday or the open of Friday, they're probably doing some profit taking. Humana, you stay long. It used the 3T line as a support area, but kind of the same scenario. Look where your resistance level could be observed. Right about there. So if it opened lower and it probably came back down through the low of today, I'd probably take profits with the idea that it's at least coming back down to test the T-line area. Doji. If it opens lower, you take your profits. If it opens higher, get ready for the next wave up. Because of your best friend gap up, you're still looking for a 45 degree. MasterCard, slow, steady uptrend. Not a good tradable stock, but if you're holding it long term, as long as it stays above the T-line, you stay with it. You can see the little wedge formation in Boeing after it broke out. Same scenario. Usually at the end of an indecisive trading range, if you see a doji, get ready to do exactly what it tells you. It's going to move in the direction of how they open it after the doji. Tier 1, stay short. You can see how it failed here, and it didn't hold at that level. Possibly some more downside. Disney has to open positive to stay long. And really, if you're not in it, you don't need to do anything with Disney until it breaks out to this level. But if this opens lower tomorrow, closing out the position because it's not near this level to tell us there's a a new dynamic. Shopify, this one should, well, I'd say you get ready to close this out if it opens lower. It has to open positive and trade positive. So why do you give this an extra day? Because look what it's done for the last few months. The T-line's been a factor, so you give it one more day to see if it's still going to be a factor. AD&T. Just stay long as it stays above the T-line. Obviously, watch to see what happens at the 200. Uh-oh. Nothing. On Lamb Wesson, nothing. I'd be someplace else, just not any direction. Devon, you stay long, but you've had a little evening star signal, up getting close to the overbought area. If it starts trading lower, they're going to come back and test the T-line. So it's got a little evening star signal telling you they might be taking some off the table here. Coop, all you can do is stay long as it stays above the T-line. Delta didn't look like it had a chart. If you're long, you can stay long, but it needs to show some enthusiasm. Your stochastics are starting to roll over, and you're going sideways. It has to open positive if you're long, and I would put my sell stop just below today's low. If it comes back down through there, they aren't taking it up. Wicks, you should have been out of this one today. Nothing. And now you've closed below the T-line up here toward the overbought area. That's just not a good-looking chart. Kell, another one that as soon as it came back down through the T-line, to stay long, it had to open positive and trade positive. I would have closed this one out because now you're more apt to have a bearish J-hook pattern setting up. EXAS. Closed right on the T-line. So you've got a bearish left-right combo, followed by a bearish engulfing, sitting right on the T-line. Very simple trade. If it opens lower, close it out. You've got two sell signals in the overbought area. Did I do that wrong? AKDX is not working. Heck, nothing. JB, where do you think this one's going? Wouldn't even be able to figure that one out. Yeti, bearish engulfing. Smack dab on the 50. If it opens lower, what do you got going on? Right, heading back down into this channel. That's a good short setup. Now, the reason it's a good short setup because look where the sell signal occurred. Right smack dab on a level that everybody else obviously has on their chart. Occidental, another one that you can get ready to short. There's your bearish left-right combo. Close below the T-line. Where's your next likely target? Back down to the trend. Ultra, stay short. I'd use today's high as a stop. If it came back up through there, the buying is telling you they're bouncing it back up to the T-line. Another failure right smack dab at the 50. If you're long, it has to open positive and trade positive. If it comes down through the T line, you close it out. It tells you that the failure at the 50 has occurred. Yes, the failure right smack dab at the 50, close below the T line. Should be some selling in the transportation. Crocs did a gap up on Friday. I'd still be a buyer of this one, especially if it came back up through today's open because of this right here. And anytime you see what I call the top one of the top ranked signals, which is your best friend, the implication is that you're going to have a lot more upside. Okay, kept us overtime. Just be ready to change your direction, or if you've closed out some long positions, get ready to add a few short positions with the expectation they could be coming back to test the T-line. All right, everybody, have a good evening. We will see you bright and early tomorrow morning. We'll see you then.